What's up, everybody, and welcome to the Justin Ford Podcast, where I'll be releasing life-changing principles and valuable information focused on all things faith, finance, family, fitness, real estate, and so much more. Let's go! What's up, guys, and welcome back to another episode of the Justin Ford Unleashed Podcast. Super excited to be with you here again today. Hope everybody's been doing absolutely incredible since the last time we spoke. We've got another great episode in store for you today. But before we get into that, guys, if you haven't followed me yet on social media, do me a favor, go ahead and follow me at the official Justin Ford. Again, at the official Justin Ford. You can find me on Instagram, Facebook, LinkedIn, TikTok, and also on YouTube. Definitely would love to connect with you. And if you haven't already done so and you're enjoying this podcast, do me a favor, go ahead and hit the subscribe button. You can also go ahead and leave me a 5-star review. Always love getting the love and the feedback that you guys have been giving me. And you can also go ahead and share this on your social media. Guys, this episode is brought to you by my friends over at Next Door Lending. Next Door Lending is an absolutely incredible mortgage company. They are a team of professionals that believe everyone should be treated as if they lived next door. Their founders and team members have more than 150 years of combined experience helping clients all over the country choose the best loan program to help accomplish their goals. Next Door Lending is currently licensed in 37 states, and if you're looking to refinance or get pre-approved, call my friends over at Next Door Lending today to speak with one of their top mortgage professionals at 888-885-3667. Next Door Lending has over 600 5-star reviews and an A+ Better Business Bureau rating. Again, call my friends over at Next Door Lending at 888-885-3667 or visit their website at nextdoorlending.com. Man, I am super excited to be here in studio today. I've got a very special guest. And before I introduce my guest, we have a clip that we would like to play. So let's go ahead and play that clip.
What if there was a way in which you could create a web-based financial solution that literally could work just like GPS for money? It literally could tell you to the penny, to the day, exactly which debt to pay off, how much and when, and leverage every dollar you have, every day you have it until you spend it. And most importantly, allow you to understand the long-term impact or implications of every single financial decision you make today in real time. That's powerful, and that's really modernizing the use of finances. And this is going to be the way in which people manage their money in the future. There's absolutely no question about it.
Definitely super powerful. And I actually have a good friend of mine here in the studio, Mr. Richard Schaffer. Richard is born and raised here in Southeast Michigan. Richard has been in the financial industry for 30 years. He's a national financial coach, speaker, teacher, and advisor. Richard is also a co-founder and national sales director of Choice Mortgage Group. He is also a co-founder of an innovative financial debt management and equity acceleration and wealth building platform that you kind of just heard the clip on. And Richard and I have known each other for about 15 years, and Richard has also been a mentor in my life, and I'm super excited to have him here today. Welcome to the show, my brother.
Thank you so much. It's certainly a pleasure to be with you. I've been looking forward to taking advantage of this opportunity for quite some time, so appreciate the opportunity.
Yeah, absolutely. And born and raised here in Southeast Michigan, but you actually live in a lot nicer place.
Palm Beach County, Florida, so down in Boca Raton.
Palm Beach. And what's exciting is, we've been wanting to, do a show together. And recently you said, hey, man, I'm going to be in Michigan, this weekend. And so we definitely... I was excited to be able to pull you in. So again, thanks for being here.
I'm hoping there's a lot of Michigan fans because I certainly came in to catch the Michigan game. So that was a great experience to be back in town.
Go Blue. Well, man, we've got some exciting stuff to share today. And, I've been in the business. I know you've been in the business 30 years. I've been in the business 17 years. I started in mortgages, back in 2005. And, we were introduced back then. And, we've had a chance to build a relationship over the last 17 years. And, you bring so much wealth and knowledge to this industry, right? One of the most knowledgeable people I know when it comes to, financial, literacy, wealth development, mortgages, debt acceleration, things like that. And I'm super excited that we've recently had the opportunity to really come together and partner together on an incredible program that I believe is going to completely change the trajectory of our real estate industry, just the financial landscape of our nation. We obviously know that, what is the average American in debt by how much money? It's like,
the numbers are staggering depending on what stat you look at. But, one of the things that's an easy hot putt talk, I would say, oh my gosh, is 1.7 million or trillion. Gosh, it's hard to even talk that big in student loan debt. We know that's become a problem that you and I wasn't even something that was talked about much 20, 30 years ago.
Yep.
Credit card debt is obviously significantly on the rise, which we pretty much could have anticipated was going to happen after COVID and so forth. And I think that, one of the things early on in my life, much like you, growing up in very meager Midwestern background, we learned a couple of things. Hard work, but in my life, it was either the construction industry or the auto industry. Those were the two check boxes I had the option of.
Yep.
And I was thankful to have had that experience. It certainly served me very well with that upbringing. But learning about money was an important thing. I think about this, Justin, and I'm sure your son's in football now. We talked about that. And, a lot of things in life are a little bit like, the games we play as kids. What would be the likelihood you could win, much less be competitive in any game if you didn't know the rules?
Exactly.
We're all forced to play what really, truly amounts to be the money game. Problem is we don't know the rules. And so early on in my life, even getting the Wall Street Journal in middle school, which I probably couldn't even understand back then, but I knew I had to learn about money. I knew that was sort of my way out, if you will. And as I learned more about it, I started realizing how there were so many, if you will, financial and banking secrets that were kept from us. And it bothered me a lot.
Right.
I knew so many people that worked hard, but they were struggling. And I thought it's not because of lack of work ethic. It's not because of being irresponsible. They fundamentally don't know the rules to the game.
Right.
And I thought, I am going to make it my life's mission to learn them and to teach them and educate people just like us.
I love what you just said, because there are secrets and rules to the game that the average person doesn't know about on purpose, right?
That's right.
And, one of the things when I was in the mortgage business, that was my first introduction to this industry was in mortgages. And even learning what the word mortgage means,
That's
right? We just, hey, did you get a mortgage? I got a mortgage. I got a 30-year mortgage. I need to get pre-approved for a mortgage. But the word mortgage actually means death grip.
That's right.
Right? It means death grip. Mort meaning death, gauge meaning grip. And mortgages are set up to literally create a death grip for people. And we see, like you were just talking about, all the different forms of debt, but it's almost like normal, which is a sad thing that, as Americans, we are so in debt, right? Because like you said, we don't know how to play the game. We don't know the secrets or the behind the scenes of really how to play the game to our advantage.
Yeah, it's interesting you say that because, well, a couple of optics as we're driving here from Plymouth.
Yep.
And you look around and it's not unfamiliar, right? The biggest banks, or the biggest buildings rather, in any city, any state, any country in the world are going to be banks and financial institutions.
Yep.
And there's two primary reasons for that. Number one, it's the golden rule. It's not the one we learned in church. It's he who has the gold makes the rules, right? Possession is 9/10. So they have the money,
right,
and they know what to do with it, right? So when you think about even the example you're using about mortgages, and certainly rates have been insanely low in the last several years. They're still historically low.
Right.
But the truth of the matter is many, many years ago, before you and I were buying houses, there was no mortgages. Right. You had to basically build your own home and figure out how to be able to do that.
Right.
When long-term instruments came out after the war, let's say in the 40s, first of all, you'd have to put 80% down. They'd only finance 20%, and that was a 5-year balloon.
Wow.
And then, of course, when the long-term vehicles came out, the first thing they did, and I guess most people probably don't really talk about this much, is that banks consulted with the U.S. Census Bureau, and they realized the average person at that point lived in their home 7.2 years. So they front-end loaded as much interest as humanly possible during the entire period of time the average person was expected to own that home.
Right.
That's why it's called the 7-year itch.
Yep.
People move, get divorced, et cetera. So they use that to their advantage. So they know that 90% of Americans remain in that sweet spot for the bank their entire lives.
Yeah.
Oftentimes you wonder why banks are so excited about refinancing you from a 5% loan to a 3%. Why does that make sense for them?
Right.
Because they reset the clock, right? So we talk a lot about not just so much interest rate, but interest volume.
Right.
How the interest is calculated, how the finance charges are assessed, how and when the payments are applied, because that's what ultimately determines how much you're paying.
Yeah, no, absolutely. Yeah, and when you and I met, it was actually, I was in the mortgage business, you were in the financial business, mortgage business, and then the crash happened, back in 2008. And I know you and I, regularly.
Fun times.
Yeah, regularly talk about, where the market was heading. And I know for the last several years, you kind of foreseen or even projected what was coming and where we are today, right? Things are changing, things are shifting. Obviously being a real estate coach, we're hearing from a lot of real estate agents that they're concerned and worried about where do we go from here.
Right.
Interest rates are on the rise, inventory starting to stay on the market longer. Like things are changing, right?
That's right.
And we've been through this before, but the majority of people haven't.
That's true.
And so, what I love about what we're going to be talking about today is really how to get ahead of that. There was a statistic that came out a couple of months ago, and I'm not sure if you heard this one, that in the next 12 months, 25 to 35% of real estate agents will be out of the business.
Wow.
They'll be out of the business. We've already seen mortgage companies closing their doors.
It's true.
We already see large mortgage companies laying off tons of people. And I think people are, it's fun. I don't want to say it's funny, but everybody loves it when the going is good, right? When everything is good, like everybody's just excited and happy. But, when things start to shift and change and it's no longer good, a lot of people don't know how to hunker down.
That's right.
And look for other ways to stay on top of things.
Well, it's interesting to talk about that. You were alluding to a podcast that I did about a year ago, late last summer. Mm-hmm. And this wasn't being prognosticative or, being Mr. Fortune teller, but there's certain things, success leaves clues, so does failure. And the financial markets ebb and flow a lot.
Right.
And it's one of the advantages or perhaps disadvantages of being in the space for 30 years. But you realize when things are good, we don't do the things we really should be doing.
Right.
I'm speaking more from the financial professional standpoint.
Right.
For those of you that are consumers in the audience, you feel it, right? We become a number. It's one of the challenges that exist in our industry, particularly mortgage and real estate, right? Because it is something that only provides compensation one time,
right?
And it does tend to influence behavior. But if you really want to be a trusted advisor, you want to create value, genuine long-term value to the people you serve.
Right.
And again, maybe it's our upbringing, but that was something that was always incredibly important to me. And nobody wants to feel transactional. So one of the problems is when the business is good, let's say the last couple of years,
Yep.
Let's be honest, it was like manna from heaven. Refis were coming out of the sky. Realtors couldn't get enough business. Obviously the business was incredible.
Yep.
But people get lulled into sleep. And I think the same thing has happened with consumers. We were having money on forbearance and people were getting stimulus, et cetera.
Yep.
Did some people save that money? Sure. But did some use it not to save money and to not be able to put money in reserve and spend? Sure. And now we're seeing that money is depleted. I believe that we are heading in a very, very scary direction the next 12 to 18 months. So last year when I started talking about these things, it wasn't based on guesswork. It was real fundamentals of what leads this process. And, we talk a lot about financial foresight. Listen, it's easy to be a Monday morning quarterback. Here we are Monday, right? Literally being a Monday morning quarterback. But it's a matter of, Wayne Gretzky said something great, and this is a completely honest statement, so don't judge me for it. But my brother was older than me, so he subscribed to, Sports Illustrated.
Yeah.
Guys, I didn't really care about Sports Illustrated other than the swimsuit issue once a year or something, so I didn't really pay attention. But the one article I read, the very first one, was when Wayne Gretzky was featured on the cover of that article, and he was the great one. And the interviewer basically said, "What made you the greatest?" And he was humble and said, "I don't know that I'm the greatest, but there's three things I did that I think are fundamentally different. I worked very hard, of course. I was focused, but strategically, I made a conscious effort to always skate where the puck was going, not where it's been." And I think that is very true and apropos for all of us, not just consumers, but professionals. Where is it going? Now, am I predicting an apocalyptic crash that we had in 2008, 9, 10? No, I'm not necessarily. But it does not mean there's not going to be a significant shift, and we're seeing it.
Yeah.
So the question is, how do we position ourselves as professionals to be able to move in the direction of where the industry is going? And as a consumer, how do you prepare you and your family to weather the storm?
Yeah. And it's interesting because we know, like, if you just look at history, there's always these ups and these downs. And usually when you have ups, especially like the one we've had recently, there has to be a correction.
That's right.
It just cannot stay on the rocket ship to the moon forever.
It's gravity. What goes up must go down, right?
It has to come down. And so, obviously me being in the real estate industry, you being in the financial service industry for a very long time, we know that a lot of people, even real estate agents and even consumers, homeowners, people are asking what happens from here and where do we go from here? And I loved that little clip that we played at the beginning of the show because, you said, what if there is a program or what if there is a way to be able to get out of debt faster, build equity faster, position yourself to kind of take control, and not just take control, but know exactly what's going on, know the game, know the back end, know the secrets of the banking system and all of that. And the awesome thing to say is there is a way. There
absolutely is. And I'll tell you one of the interesting things, and trying to be as neutral about this subject as I can, but what we know for sure is it's not about vilifying the banks, right? That would be easy to do. It's easy to be anti-establishment, anti-big business, anti-government, et cetera. And there's certainly an argument for that in certain ways. But ultimately, imitation is the greatest form of flattery. So our whole focus is how do we take literally Wall Street to Main Street? How do we make these proven systems and strategies that banks have been using for decades to make them the biggest buildings in every city, state, and country in the world, and make those available to the average person? Now, you even think about the idea of GPS. Now we've all got it in our phones, right? Not a big deal. Years ago, you had in a high-end, expensive car. Before that, who was the only one that had it? The government, the military, right? Because they were able to use it for, obviously, weaponry and so forth. But then they opened it up to the average consumer. We're doing the exact same thing with money. Now, I'm not going to tell you this is going to make us super popular with the banks because, of course, we're trying to show them actually how to bank like a bank. But in the real truth of the matter is it's a matter of how do we allow the average person to literally bank like a bank at the push of a button. Just like financial GPS helps you to navigate not just where to go, how to get there in the quickest possible time. Most importantly, how to adjust when things change. As a financial planner for a decade plus before I even got into the mortgage business, the number one challenge we found is every financial planner, generally speaking, makes this fundamental mistake, right? And every consumer on this podcast can understand this. We operate on this premise that you're going to make the exact same amount of money and your debts are going to maintain exactly the same. Well, that's not life, right? So it's that everything's going to change, and how do you quickly adapt and course correct? So when you think about GPS, even if you have a good sense of direction, there was a time when all we had was a sundial. As crazy as that sounds. And then a compass. My grandpa loved a compass. And then we had maps. Well, what does GPS do? It incorporates all of those proven methodologies, but into a user-friendly interface that immediately recalculates. So, when you're going, I live in Florida. My mom lives in the West Coast. When I drive there, I know where she lives. I've been there 100 times, Justin, but I always click mom's house on my GPS. Why? Because one, as your parents get older, they become like you were. Right? What time are you going to be here? What time are you going to be here, right? But also in the real world, there's something called traffic. And weather. And car accidents. And railroad crossings. Construction, detours, having to stop and get gas, food, whatever. But what happens every single time I do that? Recalculate. What if we could create an environment where with every changing circumstance in your life, losing your job, getting a tax refund, getting a commission,
house taxes go up,
everything,
right?
In real time, you can immediately recalculate, exactly where you are and where you're going in the future and what it's going to take to get there. That is really powerful.
That is so powerful. And because again, we go back to what we think is normal. It's normal to go to school, go to college, take out a ton of student loan debt,
get a good job,
get a mortgage, get some credit cards, go get a car, and then work to pay all this debt off for basically the rest of your life. And if you don't have a plan, if you don't have some systems, some processes, some things in place, you basically pay debt until you die. You never pay off your mortgage because how do you pay, my grandparents, a lot of people, back then would stay in their house. Pay off their mortgage and never move. But like you said, nowadays, every 5 to 7, I'm selling people's houses now that I sold houses to 2 years ago because they're just ready to move on to the next one. And like you said, with the mortgage, I remember back in 2008 when you and I really started to connect and work together. I remember you explaining how, and even though I was in the mortgage business, when I started to look at that truth in lending, that a $200,000 mortgage at 6% over 30 years was actually was it $477,000?
$431,677
and 25 cents. But it's crazy that we just think that we're taking out a $200,000 mortgage. We're making the payment because the payment's affordable. But 90% of that payment is going into the bank's pocket.
That's exactly right. And, we've become a very payment condition oriented culture, right? Can I afford the payment? Can I afford the monthly payment? This is a very dangerous game, and it only advantages one party, the people lending the money. Now, again, I'm not vilifying the banks. I'm simply just saying that when you better understand how banks make money, here's a perfect example. The average person thinks that I put my money in on the 1st or the 15th or whatever it is. And, maybe, well, let's put it this way. The average family in America makes $59,600 a year.
Right.
So let's call it $5,000 a month. Well, their expenses, their fixed expenses are probably right around $4,000, give or take.
Right.
And they spend $100, $150, $200, $300 a week on ancillary things.
Yeah.
Well, before COVID, when they used to actually go to movies and everything, right?
Right.
So the problem is the average family only has maybe $300, $400, $500 a month left, right? So in their mind, they think, well, what difference does it make if I make any interest on, $300, $400, $500? Well, see, they're missing the point. That's not how banks make money.
Right.
They're leveraging every dollar you have, every day you have it until you spend it. They're physically putting your money to work.
Yep.
And they loan out what they call an overnight lending rate,
Yep.
which they make a 0.5 percentage point a day. Now, that's 180% a year on the
Right.
money you're getting nothing on.
Right.
That has nothing to do with the spread between a car loan and savings account or a mortgage loan. That is actually physical leverage use of the money.
Yeah.
So we're into loanership of our money instead of ownership of our money.
Right.
So our whole focus is how do we turn the tables and give the average person the benefit of that leverage of ownership of their money,
Right.
even money that's just passive that's in their account, not even money that's going to their 401k or savings. We're talking about the money that's being actively used in their account.
Right.
And how the bank is able to have, through volume and velocity, make much more on it.
Yeah, and I know we're talking some pretty deep stuff, right?
Sure.
That the average person doesn't even know that's really going on, and that's the purpose of banks, right? They use our money to make money, and then we don't get anything in return. But once you start to really learn what's going on, you can really kind of take action and use that to your advantage. And so, when people are, they're, let's say right now, those that are listening right now, that they've got student loan debt,
Yep.
right? They got a mortgage, 2 car loans, whatever it is, and they're living life, they're comfortable. What I found is, a lot of times people can't even see beyond that, right? Like, what would life look like if you were debt free?
Yep.
Because what I love too is, we don't just teach people how to take control and get out of debt and, have a plan of action and a GPS to go from where you are to debt freedom, but also how to, when you become debt free, now how to create wealth.
That's absolutely right.
Yeah.
That's the big shift because, I'll take it as an example. Very well known, very successful. I respect what he's done, but I know Dave Ramsey on a personal level. I've been on his radio show.
Yep.
And I love that he advocates for people getting out of debt. I think that's incredibly important. I acknowledge him for that. But let's be honest, we're in 2022.
Right.
The idea of allocating physical dollars into envelopes is respectfully not going to be the most efficient way to do it. Okay.
Yeah, no way.
Banks don't take your money and put it in a drawer with Justin Ford's name on it.
Right.
They're actively deploying and leveraging that money. So that's what we teach. Then you take as an example, we talked about it today, Robert Kiyosaki, who I've had the good fortune of traveling with as well.
Yep.
And he talks about cash flow quadrant, et cetera. But to the average person, here's the important part. There's a lot of concepts. There's a lot of theories. There's a lot of strategies. There's a lot of video, audio content.
Right.
And people charge for all that stuff.
Yeah, everybody's an expert nowadays.
Everybody's an Instagram expert. But we're talking about proven systems and strategies, not because if I tell you how to drive to my house, you may or may not remember.
Right.
You may write it down and not read your own handwriting.
Yep.
But if we can give you an actual physical system that walks you through it, that's how you make people successful. The average person is not going to be able to absorb all this information.
Right.
So we decided instead of all that, why don't we create an actual living, breathing platform that can help you navigate.
And what I love about this platform is even a kid can follow the basic instructions of
Probably
it.
better.
Yeah, exactly. And what I also love about this platform is it literally tells you, after you put all of your finances in there, all of your debts in there, all of your income, everything in there, that it literally, like a GPS, calculates and tells you the month, date, and year.
That's right.
That you'll be completely debt free. That's insane.
It's really powerful because when you think about, what's really unique about GPS, we all are very familiar with it.
Yep.
There's 2 things that are important that we often probably overlook. Number one, you can customize the preferences. And by that, I mean, it's not just point A to point B.
Right.
It's I may want to take the shortest route.
Yeah.
Or the quickest route. Or I might want to take avoid toll roads.
Right.
You can do the same thing with your finances. You might say, I want to leave X amount of dollars in reserve, right? I want to be able to accomplish this goal or that goal. It's customized to you, and the system is going to actually evolve organically based on your preferences.
Yeah.
The other part you talked about, though, is that dashboard effect, right? GPS is great because it says turn right. More importantly, when you miss that right turn and it recalculates, it said you just added 3.2 minutes to your ETA.
Yep.
So imagine if you had a financial dashboard that would tell you that day, month, and year you're out of debt, but also exactly how much interest you've currently paid and how much you have left and how much you've already saved.
Yeah.
And any decision you made. So when you're sitting around the kitchen table with your wife and talk about buying a new boat or going on vacation, you're like, Well, let's plug into the system and see what it says. Let's see what the real cost of that is going to be.
Right.
Now, it'll make for some interesting conversations around the kitchen table, but it will also give you armed with more information.
Yeah.
I think about this, and this is a bizarre example, but imagine if I invented a magic fork.
Yeah.
Okay. We know that every January 1st, there are 2 top New Year's resolutions.
Right.
What are they?
To get out of debt and to lose weight.
Absolutely. Fitness and finance. Now, here's the interesting thing. They're the same 2 every year for 2 reasons.
Right.
They're important,
Yep.
but also people continue to fail them.
Right.
Now, it's because they don't want to get out of debt. Of course they do.
Right.
It's because they don't want to lose weight. Of course they do.
Yep.
But because the relationship between what we do and what it leads to is very obscured, right?
Right.
So imagine if every single time you took a bite of food, I had a magic fork.
Yeah.
Now, if I ever figure out how to do this, I won't even know you anymore, okay? But there was a little bit of a gauge on here. It told you exactly how many calories that bite of food was. And then you could flip it around. And it would show you exactly what you're going to look like in 90 days if you continue to eat that way. Now, the reality is that's going to make a big impact. You might want 1 piece of chocolate cake, but you're not going to have 4.
Right.
Now, that's one of the reasons why people struggle with it, right? And we also have a very perverse relationship between 2 things, money and food.
Right.
We tend to associate eating with pleasure
Yep.
and dieting with pain.
Right.
We tend to associate spending with pleasure and saving with pain,
Right.
which is why it's called retail therapy, or it's, and so until we change that paradigm, which isn't just an educational process,
Right.
but something that visually shows you the impact of one decision over the other, it begins to gradually shift your occurring of how to make those decisions. And that is a very big fundamental shift.
It changes everything. And, even for me earlier in the year, I went to the doctor, nothing major, but they're like, hey, you've got some underlining things that can 100% be handled. But if you stay on this path, you're going to get diabetes, you're going to get cancer, and you're going to die.
It's a wake-up call, isn't it?
It changed everything.
Yep.
Now I look at the things that I'm not supposed to eat a lot different, right? Because I see
That's right.
that there's a different visual underlining that if I continue down this path, it's going to.
And that's why they use that expression paradigm shift so much, right? Because we don't, generally speaking, as humans, we don't like change.
Right.
Let's just be honest. We want to be comfortable.
Right.
But when something fundamentally forces you to change your look on something,
Right.
whether it's meeting with the doctor or you lose a loved one or something horrible happens, finances, unfortunately, we need that real wake-up call.
Right.
Otherwise, we drift along, things are comfortable, we're trying to just get by,
Yep.
and we don't see how does this affect me 5, 10, 15, 20 years from now.
Yeah.
And that's really the important part of the process.
No, that's amazing. And I'm sure there's some people, Richard, listening right now, like, what are you talking about? Magic GPS system, get out of debt faster. How does this all happen? It sounds too good to be true. We hear that all the time.
Sure.
But why don't we talk about how that happens, right?
Sure.
Like, with interest, I think most people don't really understand, the reason why it takes so long to get out of debt is because of interest. But,
Good point.
But how to, like, even for instance, when somebody takes out a mortgage, pretty much every mortgage company offers the ability to pay biweekly payments.
Mm-hmm.
And by doing so, it shaves off like 5 to 7 years of their mortgage without paying more.
That's true.
But just how you're reallocating things. So why don't you talk about that?
Well, I love this subject. Forgive me, I lost my dad a few years ago, but he had some great quotes. And one of them was, the road to hell is paved in good intentions. So I would do something, and I was a pretty good kid, I think, for the most part, but I'd do something and mess up or get in trouble. And I'd say, yeah, but Dad, I didn't mean to do that. I didn't intend to do that. He goes, yes, son, well, the road to hell is paved in good intentions. And I think the same thing applies to us financially and otherwise. So as an example, when you look at the financial landscape, we become very focused on payment. We talked about that, but also interest rate. Right. In real estate, what is it? Location, location, location.
Yep.
In the financial industry, it's interest rate, interest rate, interest rate.
Right.
But that's only part of the story.
Right.
Right. Remember, magicians are successful because they get you to focus on what they want while they're doing something else.
Exactly.
So interest rate is important, right? The lower the interest rate, the better you're off. But it's not interest rate.
Right.
It is how the interest is actually calculated, how the finance charges are assessed, and how and when the payments are applied.
Right.
So let's illustrate in a practical way. Okay.
Right.
Let's say, for argument's sake, and this would never be the way it would work out in real life probably, but let's say you had a 6% credit card.
Yep.
Right? Which would be incredible, I suppose.
Right.
If you had a 6% line of credit, it's about what it would be right about now. A 6% car loan, a 6% mortgage.
Right.
Now, from the outside, they all look the same, don't they?
Yep.
But they're not.
They're not.
So let's say, as an example, you have the 6% credit card, and your wife decides that she has some things she really wants to buy, and so she runs up $5,000, $10,000 in that card. Now, if you pay it off in full before the end of the grace period, how much interest do you pay?
Zero.
But here's the important point. If that's true, which it is, then did the interest rate in that scenario actually matter at all.
Not at all.
No, it could have been 0% or 24%. So
Right.
the interest rate was not the important factor. It's how that particular type of product calculates interest, right?
Yep.
Let's take a line of credit, home equity line of credit, personal line of credit, business line of credit. Let's say it's also 6% and you borrow $10,000 on the first. You pay it off on the 17th or the 20th or the 21st, whatever. Well, you're no longer paying zero interest like you are on a credit card. You're paying an average daily balance. But what that does mean is you're no longer paying 6% on 10,000. You're paying the equivalent of maybe 2 or 3% on that 10,000.
Right.
So again, was interest rate the most important factor? No.
Nope.
Take a car loan, traditional car loan. Now, not one of these crazy hybrid, you finance a car for 17 years, okay? But generally a 3, 4, 5, 6-year loan.
Yep.
Let's say your payment is $500.
Yep.
$100 goes to interest, $400 goes to principal. Same thing happens in payment 2. Same thing happens in payment 3, et cetera.
Yep.
Guess what loan doesn't work that way?
Mortgages.
That's exactly right.
Right.
So even though it looks to be generally the lowest quote unquote interest rate we may have, it is among the highest in interest volume. It's not just because of the size of the loan, that's part of it, of course,
Right.
or the term, that's a big part of it, but it's exactly how that instrument is designed, okay? Now, mathematically, it's sound, but it's the way in which it's designed. So it means people are always on the front of that curve.
Yeah.
Perfect example. You know, and I'm an advocate for the value of refinancing, so I'm not going to say anything contrary to that.
Right.
Especially if you're doing something valuable, you're putting money in your house and you're, probably doing a renovation, you're doing consolidation. Yep. But 73% of people with more than 24 years left on their mortgage go back to 30 years.
Right.
Now, whose advantage is it to extend the length of your indebtedness? You or the bank?
The bank all day.
You got it. They're going to add cost 3, 4, 5%. It might be 6, 8, 10,000. Yep. You've now increased the size of your loan.
Yep.
Whose advantage is that?
Banks.
Last but not least, you reset the clock on that front load interest back to 0.
Right.
So in many cases, somebody could go from a 6% loan, let's say, to a 4%. But if you held their statements side by side, the previous one, the original one, and you just divide the total payment into the interest, you'd see your interest volume, the percentage of interest you make on that payment actually went up 8 or 10%.
Right.
Even though your note rate went down.
Right.
Because the payment is better. So these are just a couple of small examples that it's all a matter of how do we game the system to leverage use of our money to eliminate these problems.
Yeah, I mean, and I think, again, a perfect example is, and maybe you can touch on this, because I think, you gave an overview, but for instance, just a mortgage company, just paying bi-weekly,
Sure.
How is it that you can take a $2,000 payment, pay $1,000 on the first, pay $1,000 on the 15th, and cut off 5 to 7 years of your mortgage without doing anything else?
So here's a little bit of a misnomer, okay?
Yep.
So one of the reasons, of course, that banks want you to have escrow, well, of course, naturally, it's they want to make sure the money's there available.
Yep.
Well, that's partially true.
Yep.
It's also because guess how much interest you get on that escrow?
Right.
0, right? Again, loanership of our money.
Yep.
How many people overpay on their taxes so they get a refund back and they think that's cool? Well, guess who used your money all year for nothing? Bank. Loanership of our money. So let's talk about the example of biweekly or paying extra money principal.
Yep.
Both good things to do.
Right.
Here's one of the reasons why they're not efficient enough. Number one, there's 52 weeks in a year.
Yep.
Half that's 26, half that is 13.
Yep.
So you are going to force an extra payment a year. That's a good thing for sure. The problem is, though, it's not working the way you think it does. And by that, I mean, if you look at the language in a note, which I'm sure nobody on this call is nerdy enough like me to do it, but the language actually says that no additional money is applied to principal until the entire minimum monthly required payment is satisfied.
Right.
Which means you could pay 1/4 of the payment every week.
Right.
You could pay 1/30 of the payment every day.
Right.
But they're going to hold all of that money until the 30th day.
Yep.
So they're not actually applying it sooner. You're just forcing additional payment.
Right.
Not a bad thing, okay?
Right.
But it's not leveraging the entirety of the money you're actually earning and cash flowing.
Right.
That's the trick. Or let's say you paid an extra $100 or $200 a month your mortgage. Great thing to do.
Yep.
Here's the challenge with that. What happens the 1 month you can't do it?
Right.
Do you send $126.14 instead? No.
Nope.
You send nothing.
Yeah.
And does 1 month lead to a second or third month?
Right.
And what about the month that you really could have sent $386.14? How would you possibly know?
Right.
So it's a matter of maximizing based on your current circumstances. That's
Yeah.
really where being able to utilize algorithms and technology is going to be able to help us be more efficient.
And that's what I love about this platform is it really takes the guesswork out of it. Because again, I know, being 30 years in the financial industry, again, you're one of the smartest, most knowledgeable people I know when it comes.
My daughter doesn't think so. She's 12. I don't have her convinced at all, I promise you.
But when it comes to this stuff, people that are probably listening are like, oh my gosh, that's a lot of information.
Sure.
And that's what I love about us, partnering up together to be able to offer a platform like we're talking about, not only to, to the customers and clients that I'm working with, but even if you're a real estate agent, and I want you to talk about this for a second, Richard, because, I love when you talk about, because you've serviced clients, for so many years, but even for those real estate agents that are listening right now, maybe 25 to 35% of those listening are going to be out of the business next year.
That's right.
How can a program, like what we're talking about, set, even if it's a mortgage person, insurance person, real estate person, that's listening to this podcast right now, how can it help set them apart to be able to create something for their customers or their clients that nobody else is doing?
That's a fantastic question. I'll be honest, I'm a little bit of a softie from the consumer standpoint for the reasons we talked about.
Yeah.
Michigan is, the longer I'm away, the more I realize, there's pros and cons to every area, but there's something very fundamental about the work hard mentality, and things don't come easy.
Detroit hustles harder.
They have to, and we don't get by on our good looks, so to speak, right? And I think there's something about that, okay? So I think I'm a softie in that standpoint. But I also look at being an advocate for the financial professional is not inconsistent with providing value to consumers. Right. I've believed, and it's more than words, Justin, you've got to be able, both people have to win. And we find that's a big problem in our industry. We feel like if for me to do well, I have to not help the consumer or not advantage the consumer. That's ridiculous, right? So there's a couple of things that I think are important. Now, let's talk about real estate. I think that's probably an easy example because you're so successful at it. Financial planners, advisors, insurance agents, mortgage guys, that's a conversation we could also have. But let's deal with the real estate agents. First of all, there's now a little over 3 million agents in the United States. That's the first time we've ever had that kind of number. Florida, where I live, ironically, just surpassed California for the first time in history as the most number of agents. And we have half the population. So what's exactly happening? Well, number one, there are some superstar real estate agents. I mean, I know some of them myself personally, you included. However, unfortunately, it's become such a popular medium that people do fall between the cracks. And let's say, as an example, I'm a brand new real estate agent and I'm competing with a Justin Ford. Let's be honest, and no, not trying to placate you, but the reality is you are well known, you're established, you're successful, you've got a track record, you sell 100 plus homes a year. That's very intimidating for an average agent. So let's say I stepped in as a third party and my name is Bob and you're Justin, okay? And I said, Bob, listen, if you go to meet with a client, you do an interview, you don't have this Rolodex that Justin has. You don't, right? It's not something that you can inherit in 5 minutes when somebody's been in the business for a decade and a half. But you can level the playing field when you can provide more value. Are they going to have as much experience? No. Only time gives you that. As many tools and resources? Not likely. But there is one thing that consumers care more about. What's in it for me? How do you provide more value to me and my family, not just today, but tomorrow, next week, next year? So here's a perfect vernacular that I use with a lot of my real estate professionals. So let's say, as an example, in this interviewing process, one of the things that's said is, hey, well, Bob, I guess if I'd be Bob, how do you help me sell more houses? I say, I'll tell you what I'm going to do. I can't compete with Justin Ford with all that experience and all that knowledge. Of course, I'll probably turn it into a negative thing because you're too big to help me, right? But what I'm going to say is, but I'm going to tell you one thing I'm going to do that nobody's done. Not only am I going to help you find your dream home, Mr. and Mrs. Smith, I'm actually going to put you into a program that's going to help you own it free and clear in a fraction of the time. Now, let's be honest, for those of you listening, whether you love Justin and he's great or somebody's brand new, you're going to stop and say, oh, wait a minute, what are you talking about, right? The other really important thing, and I know you're going through this, we talked about this, the market is, I'm not saying we're going to have this fall up, but there's an adjustment.
There's a shift taking place.
And it's beginning already, right? So you're going to get a lot of folks, and you could actually chime in on this, that let's say you've been following up with me for a couple of months, and I said, Justin, my wife and I have talked about it. I just think the market's going to correct. I think I'm just going to kind of sit on the sidelines for maybe a year or something and just see how things go. Now, if you're a really good veteran real estate agent, you know how to answer that question, right? Hey, it's always a great time to buy real estate and all that. And it's not necessarily untrue. But if you were consulting and advising your mother, you might say, Mom, that might not be a bad idea. But imagine if now that agent could genuinely say, I totally understand how you feel. In fact, I tend to agree with you. But that is exactly why we've incorporated the use of a program that could actually help you build equity faster, even in a down or declining market. Now, you've got to be able to separate yourself in a way, but it's not being the flashiest and having your picture all over town. That's all great. but it's how do you genuinely get back to grassroots, real value to the client, providing something that provides long-term, not just the transactional day,
right?
But 6 months later when that novelty is worn off and they have to buy new windows,
right?
2 years from now, 3 years from now, what is going to keep you top of mind? It's not going to be how good a job you did. That's part of it.
Right.
But it's going to be, why did they think about you ongoingly? If
Yep.
you put them on a track to be debt-free, to build equity faster, to create wealth for their family sooner, believe me when I tell you, you are going to be the number one person in their mind.
Absolutely. Because right now, I believe the statistic is for the National Association of Realtors, for a seller or a buyer, they rarely use the same agent again, right? When they go to buy or sell a home, and the reason why, number one, is they're not top of mind. And number two, like you said, there wasn't enough value, or there wasn't even, I know we were talking about this before the show, there was no communication to stay in touch with the client,
Right.
you know, build the relationship beyond the transaction, because in real estate, we're so transactional focused, right? It's not like a financial planner or an insurance agent where the person remains your client ongoing and you continue to earn from them over and over. You know, real estate, you help someone buy a house, you help someone sell a house, and you're moving on to the next person.
That's right.
This right here allows you as an agent to not only stay in touch with that customer or their client, but every time that they look at this dashboard, every time that they see, oh my gosh, my 30-year mortgage is going to be paid off in 15 years or 17 years or 10 years, they're always going to have you on mind because you're the one that provided something additional to them that nobody else is doing. That's a game changer.
It's 100% a game changer. And the reality is, you know, we've been talking about a lot of, you know, more detailed, in-depth, you know, concepts. But the reality is, I'm just telling you how the computer works.
Right.
The average person says, you know, if you pull out your phone, the average person has no idea how that actually works.
Absolutely.
If I punch in this button and this button, I can get to where I'm going.
Right.
Now, 15 years ago, when we started developing the early platform, and, you know, technology has changed a lot since then.
A lot.
But if you're somebody that can use GPS on your phone, you can use online banking, and you've got social media, trust me when I tell you, a 70 or 80-year-old could do that. My mother texts me way too much at this point. It's the worst thing I ever taught her in my life. So the idea is, it's really a matter of how do you take these really complex, sophisticated, yet proven systems and strategies, but make them available in a really simple push and play process
that anybody can use. Right?
Anybody can use.
And that's the beautiful thing. It doesn't require credit checks.
Nope.
It doesn't require anything like that. And it not only pays off mortgage debt,
all debt.
It pays off all debt, even student loan debt.
In fact, I'll tell you one of the reasons that it really works well in that regard is because, you know, just like the average person, you know, is pretty busy. You know, they're pulled in a lot of different directions. You know, once your kids get older and they're involved in sports and everything else, you know, it's like our life changes. Like we're the shuttle now, right? So the average person doesn't have a lot of time. So it's got to be something that's efficient and simple and easy, and it dynamically moves with them. So I think that's probably one of the most important factors in making it accessible to the average person, because they've got to figure out, how do I incorporate things in my life? So if somebody in the average, I would say most of our users, and we've got 70-some thousand plus users. In fact, currently we've paid off about $2.4 billion just in principal debt.
Did you say million or billion?
Billion.
With a B.
Billion, that's right.
Wow.
And the amount of interest we've eliminated is about 4 times that much, but just real physical. So one of our credos, honestly, is, you know, take back America one family at a time. You know, I think that we sometimes get caught up in the clutter of just all the things happening in the world, politically, news-wise, whatever. But it comes down to something simple. Where are you starting? Right. Charity begins at home. You know, my father
and it's never too late to start either.
It's thank God for that. Otherwise, I think we'd all throw up our hands. And I, you know, my dad being a construction guy used to tell me that, unfortunately, the reality is sometimes the last home you work on as a construction worker is your own. And I think financially, we're guilty of that in our industry. Sometimes we're so client-centric. The last person we focus in on is our family. So charity's got to begin at home. It's how do we begin being the right kind of example, the right kind of steward for our family. And of course, that's going to be able to manage. And that's one of the things you've done so well. You know, I think you're an embedded part of your community. I think that makes you somebody that people can relate to. And I think that, you know, this sounds silly, so forgive me, but nobody wants to follow, but people do want to be led, right? They want trusted people to provide that direction. And you alluded to the fact that when I was in the insurance and securities business, you're right. There's a financially vested interest for me to maintain that relationship. And so therefore I do. In the mortgage and real estate industry, unfortunately, it's transactional orientated. And we need to shift that. We need to shift that, because otherwise we're going to find ourselves obsolescent fast, because we've got to provide more legitimate, genuine value on an ongoing basis to our clients.
Absolutely. You know, and I do a lot of stuff, right? I'm involved with quite a bit of stuff. I have a lot going on, but I can't tell you how excited I am for this, because to me, to be able to, like, when we look at our country, I think the number one cause for divorce is finances, right? We look at not only as a nation how much debt we're in, but just in general of households. What would life look like, right? For those that are listening, what would your life look like if you were completely debt free, or if you had a plan where you could wake up every day and know exactly, when your debt freedom date is? What if you knew not only how to get out of debt, but think beyond debt?
That's right.
Think beyond, like, what would life look like if I was debt free and I was wealthy, and all the income that I had coming in, I could use it to support charity, to give it away, to invest it, to make a difference. To me, I'm more excited about this project than a lot of the other things that I have going on, because it's like you said, this is more than just, helping people get out of debt. It's like, it's changing the trajectory. It's changing families. It's changing, people's landscape. It's potentially saving people from divorce. There's so much at play because of debt. And when you can give people something, it's basically giving people hope that there is a way out, right?
Justin,
there's a light at the end of the tunnel.
Just going to say that. One of my favorite movies is Shawshank Redemption.
Yeah.
There's that scene with Timothy Robbins and Morgan Freeman in the courtyard. And he said, hope is not just a good thing, it's maybe the best of things.
Right.
And I'll illustrate that with a client example I had. And I am a softie. I probably don't want everybody to know that, but I'm kind of a softie. And I really have a bleeding heart for helping people. And I find that, sometimes that gets overwhelming. But one of the things that we noticed is I had a client, and this is last fall, I believe, and I knew her family. At this point, I'm doing so many things, it's hard to be involved directly with my clients as much as I'd like. But this was a friend and his mother. And his dad had died maybe 2 years before that.
Yeah.
But they just took out a 30-year mortgage 3 years before that. Yep. And she was, I believe, 62. And all she could think about is, I'm going to be 90 when this loan is paid off.
Right.
Now, think about that. How many people in their 50s and 60s are now taking out 30-year loans? What is the plan there?
Right.
Long story short, she felt hopeless. And she was brokenhearted, all of it, of course, right? So I actively was engaged in this client. We ran analysis, didn't change anything. Right. She wasn't changing or increasing her minimum monthly payments. This is not, debt, settlement or anything like that. With the same dollars she had, and she didn't have an overly big budget, okay? A lot of a discretionary income. We're going to have every single debt she has, including that mortgage, paid off in 7.1 years, and she'd be 69.
Wow.
She literally started crying on the phone, and guess what? So did I. Yeah. Because, and that's not something, let's be honest, that happens in the everyday life of a financial planner or a real estate agent, or people are happy for a moment. But that's an illustrative impact, because hope is the most important thing. Right. And if we were honest, at some point in our life, we get beat up and we fail a few times and we start losing hope. Our whole goal is, and as I said, to take back America one family at a time, but it's giving people renewed hope that they actually can accomplish those things they wanted, and giving them a proven process to be able to follow.
I love it. And even for me, me and Joy, we talked about it on our show, we went through a lot of, tough times. During the downturn, we lost our house to foreclosure, went through bankruptcy, lost our house to repossession, didn't have a plan. And it wasn't until 2 years ago in 2020, after renting for almost 13 years, that we purchased a home, right? We took out a 30-year mortgage, this, that, and the other. But what's amazing is, when I ran my free analysis, my mortgage and all of my debt, which I don't have a ton of it, will be paid off in less than 10 years.
That's amazing.
Without changing anything. And
you're how old now?
30. I'll be 40 this year.
So imagine 49 years old, being totally and completely debt-free.
Completely, yeah. Yep. And what I love about that is I have a plan, right? I can see the light at the end of the tunnel, and not only that, but now I can also help other clients, that I'm helping purchase a home, getting 30-year mortgages, create an opportunity for them to also see the light at the end of the tunnel. But what I'm really also excited about is all the real estate agents that I work with in the business that can also help their clients have the same type of opportunity, which will then separate them from being just a regular real estate agent, traditional real estate agent, to really leading. Because I think most real estate agents want to
be a trusted advisor,
right? They want to be a trusted advisor. This right here changes the game and sets them apart.
And I'll tell you, there's two things about that I think that's powerful as well. When you think about, the average real estate agent may say, well, if they pay off their house sooner or later, it doesn't really affect me.
Right.
But it does.
Right.
Imagine if your client, because I will tell you the way the system works is that typically we're able to help them lower their sort of weighted effective interest rate to as low as 1 or 1.5%. Now think about that number for a second.
Right.
If that number before was 5, 6, 7%, we've just eliminated 2/3 of the interest they otherwise would have paid to the bank.
Right.
And never seen again.
Right.
What if we could redirect 2/3 of that money to the bank of you?
Wow.
Right? So you start thinking about if they could build equity faster, pay that down. Now they could upgrade their house faster.
Yep.
They could buy a second home. They could buy an investment property. There's an example that we illustrate that I think is incredibly powerful. I hope everyone hears this. But in the time that the average person would pay off their 130-year mortgage, which, by the way, is usually 40 or 50 years because they keep refinancing or whatever.
Yeah.
Imagine if they could own 4, 5, 6 properties in the exact same time with the exact same dollars by being able to strategically implement this kind of idea, right? That gets to be a complete game changer, whether it's retirement, college, or it's just developing a real estate portfolio, passive income in your future. That's a game changer for a lot of families.
This makes someone who's not financial savvy without having to have 30 years in the financial industry.
I know, dang it, where was it 30 years ago?
And that's what I love about this program. And so, if you're listening right now and you're a real estate agent or even a consumer and you want to know more, about what we're talking about today, I definitely want you to reach out to me because just like, Richard talked about with his client, just like I did, we have a way for you to run a free analysis, right? We don't need your social security number.
Nope.
We don't need all this private information. It's a real simple, application. It's not even an application. It's really just what are your debts, right? What is your income, and all of your financial basic stuff. And it literally will show you the month, day, and year that you will be debt free.
And we do that free. We do a free complimentary analysis because we know the results are so powerful. In fact, I'll be honest with you, I typically use half of whatever net discretionary income they have because the numbers are that good.
Right.
And how often does that happen in business where people literally under-promise and over-deliver?
Under-promise, over-deliver.
I'm like, you have $800 a month discretionary, let's use 4.
Yeah.
Because people don't realize how leveraging their money more effectively, and as we talked about literally banking like a bank, completely changes that trajectory in an incredibly profound way.
Yeah.
And I think that's what we're so excited about. But also, I'll be honest, it's exciting to partner with someone like you because, you're a fundamentally good-hearted guy.
Yeah.
You want to do good things. And I think that's been lost in our industry. I'm not saying there aren't good people in our space. Of course, that would be insulting. But I think we get so caught up in trying to have and get that we forget about being and becoming, making a difference.
Yeah.
You get older, I've lost a parent. My daughter is 12, and I start thinking it's about legacy. It's about contribution. And it's about fundamentally making a difference. And I think that sounds like words, but when you start living that life, it's very, very fulfilling, and it makes a huge difference.
Huge difference. And again, when you can kind of take charge, right, and know where you're at and where you're going, because I think so many people are just going through the motions that there's really no light at the end of the tunnel, and people don't even have a plan.
No.
Right. And this just changes everything, because when you can have a plan, when you can know that there's an end date, when you know that you're like taking control, it just changes everything.
I'll tell you, we've got another little secret part of this program where if you're going to buy something, it's called a what if simulator,
what if simulator,
So you can say, well, honey, what if we bought this new fishing boat? How big a difference could it be?
Right.
It's $8,000, but it's really only, $179 a month, right? Because that's how we're going to sell it, right?
Yep.
And the system says, hold on. Forget about it. It's not $179 a month. It's not even $8,000. It's really $13,624.11, even if you paid cash.
Right.
Because that is now the opportunity cost associated with making that decision versus dedicating it for debt service. You still may do it, but looking at it as a $13,000 purchase is a lot different than $179.
Right.
And this is respectfully what banks don't want you to think about.
Right.
We're trying to pull the veil back of that curtain and saying, this is how these are really working, give you more information to make much better decisions for you and your family.
And not only that, what's great is if let's say that GPS says 10.2 years, right? But then you put in this what if simulator and it goes from 10.2 to 11.
That's right.
Right? It makes you think differently about your purchase, because all of a sudden now your freedom date or your end date of, getting out of the rat race and getting out of debt, you're pushing it back. So it makes you double think and think twice about that purchase.
It really does. And when you think about small things, and, we stopped at Starbucks on the way here, so we're guilty here.
Yep.
My daughter, I beat this into her all the time, but we just think, oh, it's only $4, or, well, it's not even, it's $6 is what we should be calling it, right? $6, not Starbucks.
Yeah.
But the whole idea is that these little things don't seem to add up. What if you have a storage unit with a bunch of junk you really don't use anymore? What difference could it make? Boom, 7 months.
Right.
How much interest? $4,000.
Right.
You start seeing how these small decisions start really empowering you to make different sort of changes. And sometimes they're incrementally small. Like we tell people, most of them don't make any legitimate change their lifestyle whatsoever by deploying this sort of more systematic strategy.
I love it. Richard, this was incredible, and I know that next time you come into town, we gotta keep this going, because this is obviously, I believe, super important to where we are, today, as far as the financial landscape of where our country is. Obviously, the market changing, and there's so much we didn't talk about today that I think there's so much more to talk about. And so, again, for those that are listening right now, if you want more information or you want to learn more about what it is Richard and I are talking about, definitely reach out to me. As you know, you can reach me, Justin at JustinFordUnleashed.com. You can obviously follow me on social media. You can also, reach out to me if you have any questions, because to me, this is vital. Like, this is super important. This isn't just, another great episode of, Justin interviewing another guest. This is like Richard said, taking back America one home at a time and really helping people. Being in the real estate industry, I understand that when I help somebody purchase a home, the chances of them ever paying this off is slim to none. Well, now we have an opportunity to be able to help people get out of debt, build equity faster. And if prices are going to fall, this is going to be able to accelerate that equity position. God forbid we do see a market shift like we did back in 2008, where people couldn't even sell their home. The only options they had was short sale or foreclosure, and both of those wrecked people's credit. This right here gives people the opportunity to get ahead of the curve, to be able to pay down debt faster, to be able to cancel interest, and to be able to take back the opportunity of freedom. And so, again, super excited. Richard, thank you so much for coming on the show today.
It's a pleasure.
Guys, again, thanks for tuning in. I want to remind you that this episode was definitely brought to you by our friends over at Next Door Lending. Again, Next Door Lending is currently licensed in 37 states, guys. Awesome, incredible lender. If you're looking to refinance or to get pre-approved, call my friends over at Next Door Lending, guys. This is a team of professionals that believe everyone should be treated as if they live next door. Tons of experience, tons of credibility. They even helped one of my personal clients literally get pre-approved and close in less than a week because we were on a timetable. Guys, if you're looking to get pre-approved, I want you to reach out to our friends over at Next Door Lending. Give them a call today at 888-885-3667. Again, that's 888-885-3667. They have over 600 5-star reviews, an A+ Better Business Bureau rating. Again, give them a call at 888-885-3667 or visit nextdoorlending.com. Thanks again for tuning in, guys. Another great episode here. If you like the show, again, leave me a 5-star review. Feel free to share it with your friends, your family members. Follow me on social media at The Official Justin Ford. We're definitely going to bring you more information. Got some great things coming down the pipeline. We want to help you really be able to set yourself apart within this business, the real estate business. But if you're a consumer, we want to give you tools and resources to help you in your financial position. 2 things I always end the show with. Number 1, it's not how you start. What matters is how you finish. And number 2, with God, all things are possible. Thanks for tuning in. God bless you guys, and we'll see you on the next one.